The word millionaire sounds big. It sounds complicated. It sounds like something reserved for other people. People with fancy degrees, high-powered jobs, a lucky break. You might think the world of finance is a complex game, designed by insiders to keep regular folks out. They use confusing jargon and create intricate products to make you believe you need their expensive advice. But that's a story sold to you to keep you on the sidelines, paying fees for things you don't need. The truth is much simpler. Becoming a millionaire is not about secret knowledge. It's not about risky bets. The path to wealth is actually straightforward. It's so simple it can be hard to believe. It doesn't require a stock-picking genius. It doesn't demand you predict the future or time the market. All it really requires is discipline and a basic understanding of one powerful tool. This tool lets you harness the power of American capitalism. It doesn't require you to be an expert. It's available to anyone with an income and the patience to let money work. Forget the noise. Forget the talking heads on TV. Forget the get-rich-quick schemes. They promise overnight success but deliver disappointment. The real road to financial independence is like a long, steady walk on a clear path, not a frantic sprint through a confusing jungle. It's about owning the productive engine of the economy and letting it do the heavy lifting for you, buying and holding a piece of the best businesses in the world, then simply getting out of the way. This isn't a fantasy. It's a blueprint. The goal here is not just having $1 million. It's about what that money represents. Freedom. FU money. The power to say no to a job you hate. The ability to spend your days as you see fit without financial worry. So what is this magic tool? It's called VOO. Let's break that down. VOO is the ticker symbol for the Vanguard S&P 500 ETF. That might still sound like a mouthful, but the concept is beautifully simple. Think of the 500 largest, most successful, most profitable publicly traded companies in the United States. Apple, Microsoft, Amazon, Google. These are the titans of industry, the engines of innovation and profit. Now imagine you could buy a tiny piece of all 500 of them with a single purchase. That's exactly what VOO does. An ETF, or exchange-traded fund, is just a basket that holds lots of different stocks. VOO is a basket that holds stocks of the S&P 500 companies. When you buy one share of VOO, you're not betting on a single company. You're not trying to pick the next big winner. Instead, you're instantly diversified. You own a sliver of the entire American corporate landscape. If one company in the basket has a bad year, it's balanced out by the hundreds of others that are doing just fine, or even thriving. This diversification is your shield against the risk of a single company failing. The Vanguard part of the name is also critically important. Vanguard was founded by a man named John Bogle, a hero to the small investor. His revolutionary idea was to create funds that were incredibly low cost. Before Bogle, funds were run by managers who charged high fees to try and usually fail to beat the market. VOO's low cost or low expense ratio is its superpower. The fee for holding VOO is a minuscule 0.03% per year. Compare that to actively managed funds that can charge 1% or more, costing you $100 or more for the same investment. Over decades, that difference in fees is enormous. VOO ensures that the vast majority of the returns generated by your money stay in your pocket, where they belong. When you buy a share of VOO, you must understand what you are truly purchasing. You are not just buying a piece of paper or a number on a screen. You are becoming a part owner in 500 of the world's most powerful businesses. You own a piece of the smartphone in your hand. You own a piece of the software running on your computer. You own a piece of the delivery truck that brings a package to your door. You are a capitalist. You are leveraging the collective brainpower, innovation, and hard work of millions of employees across the country. This is a profound shift in mindset. Most people spend their lives as consumers. They buy products from these great companies. They pay for services. The money flows in one direction, from their wallet to the company's bank account. But as a VOO investor, you are on the other side of that transaction. When millions of people buy a new smartphone, a portion of that profit flows back to you. When a company develops a life-saving drug, you share in its success. You are no longer just a customer, you are an owner, benefiting from the very consumerism that surrounds you. The S&P 500 index, which VOO tracks, is also a self-cleansing organism. It isn't a static list of companies set in stone. Companies that falter and shrink are eventually removed from the index. They are replaced by the new rising stars, the innovative and dynamic businesses that are growing to become the next giants. This means you don't have to worry about picking the winners of tomorrow. The index does it for you. By simply owning VOO, you are always invested in the current champions of American business. This passive ownership is the key to its brilliance. You aren't required to make decisions. You don't have to read quarterly reports. You don't have to analyze balance sheets. The market does the work. Your only job is to buy more shares, reinvest your dividends, and hold on. You are delegating the complex task of running these businesses to the most capable CEOs and management teams in the world. Your investment grows not because of your cleverness, but because these 500 companies are relentlessly focused on growing their profits, and you are along for the ride. It's natural to wonder, is VOO really the best way? What about other options? Let's compare. The most common alternative is picking individual stocks. This is what you see in movies, the high-stakes gambler trying to find the next Amazon. In reality, this is a loser's game for most people. For every stock that soars, many more stagnate or fail completely. It requires immense research, skill, and luck. Even professional money managers fail to beat a simple S&P 500 index fund like VOO over the long term, especially after their high fees are factored in. Then there are other types of funds like actively managed mutual funds. These are run by experts who charge you hefty fees. The data is clear. The vast majority underperform the market. They churn their portfolios, racking up trading costs and taxes, all while charging you a premium for the privilege of delivering mediocre results. VOO, by contrast, is passive. It doesn't try to be clever. It simply buys and holds the 500 biggest companies, keeping costs at rock bottom and letting the market's performance flow directly to you. What about real estate? Buying property can certainly build wealth, but it comes with its own set of major headaches. It requires a large down payment, making it inaccessible for many beginners. It's illiquid. You can't sell a piece of a house if you need cash quickly. You have to deal with tenants, toilets, and taxes. It's a hands-on business, not a passive investment. VOO, on the other hand, can be bought for the price of a single share. It is incredibly liquid. You can sell it any day the market is open, and there are no tenants to call you about a leaky roof at midnight. Finally, consider other assets like gold or bonds. Gold doesn't produce anything. It's a rock. Its value is based purely on what someone else is willing to pay for it. Bonds are essentially loans. They provide stability and income but lack the explosive growth potential of stocks. For a young person on the path to their first million, the primary goal is growth. And nothing has proven to be a more powerful, reliable, and accessible engine of long-term growth than the U.S. stock market, captured perfectly by VOO. Becoming a millionaire isn't magic, it's math. And the math is simpler than you think. It relies on two powerful forces: your consistent contributions and the magic of compound growth. The stock market, as represented by the S&P 500, has historically returned an average of about 10% per year over the long run. Of course, this isn't a straight line. Some years are up, some are down. But over decades, this has been the powerful trend. Let's use a more conservative 8% average annual return to be safe in our calculations. Let's look at an example. Imagine you are 25 years old and can invest $500 per month. That's about $17 a day, the cost of a fancy coffee and a sandwich. If you consistently invest that $500 every single month into VOO and earn an average 8% return, your money starts to work for you. After 10 years, you would have invested $60,000, but your account would be worth around $91,000. The extra $31,000 is the growth from your investments. That's a good start, but the real magic is just beginning. Now let's keep going. We don't touch the money, we just keep adding that same $500 every month. After 20 years, you've put in $120,000. Your account balance? Around $295,000. You've more than doubled your contributions. After 30 years, you've invested a total of $180,000. Your VOO portfolio would now be worth approximately $735,000. Notice how the growth is accelerating. The gains in the last decade far outstripped the gains in the first. This is compounding in action. Your money is making money, and that money is making even more money. To cross the finish line, you just need a little more time. After about 34 years of investing that same $500 per month, your portfolio would cross the $1 million mark. You invested a total of $204,000 of your own money, and the market did the rest, adding nearly $800,000. If you can invest more, say $1,000 a month, you could get there in just 26 years. The variables are simple: how much you invest, how long you invest for, and the rate of return. With VOO, the rate of return is taken care of by the market. Your job is just to be consistent. The simple path is powerful, but it's not always easy. The biggest obstacles are not in the market, they are in your own mind. The first and most dangerous trap is trying to beat the market. You'll hear about a hot tech stock or a revolutionary new industry, and you'll be tempted to pull your money out of VOO and gamble on it. This is a fool's errand. For every person who gets lucky, thousands more lose. Sticking with VOO is admitting you don't know more than the market, which is the wisest financial decision you can make. Stay the course. The second trap is fear. Markets go down. It's a normal part of the cycle. When you see your account balance drop by 20% or 30%, your gut will scream at you to sell before it goes to zero. This is the absolute worst thing you can do. Selling when the market is down is how you lock in your losses permanently. You must have the courage to do nothing, or better yet, to keep buying. When the market is down, shares of VOO are on sale. Every dollar you invest during a downturn buys more shares, supercharging your returns when the market inevitably recovers. Another trap is paying high fees. While VOO is wonderfully cheap, the financial industry is filled with products that are not. You might be tempted by a financial advisor who promises to manage your money for a small 1% fee. As we've seen, that fee is a massive drag on your returns over time. It can rob you of hundreds of thousands of dollars over your lifetime. Your goal should be to keep your investing costs as close to zero as possible. VOO makes this easy. There is no need to pay someone a fortune for a strategy that you can execute yourself for next to nothing. Finally, avoid complexity. The financial services industry thrives on making things seem complicated, so you'll pay them for help. They invent complex products and strategies that often benefit them more than you. Your plan should be simple enough to write on a napkin. Buy VOO every month. Reinvest dividends. Never sell. That's it. Don't get distracted by options. Don't get distracted by futures. Don't get distracted by cryptocurrency. Don't get distracted by whole life insurance sold as an investment. Reading about this is one thing. Taking action is what builds wealth. The good news is that starting is easier than ever. Your first step is to open a brokerage account. Think of this as a special bank account for holding investments. Vanguard, Fidelity, Charles Schwab. You can open an account online in about 15 minutes. It's as simple as opening a checking account. Don't let this first small hurdle stop you. It is the gateway to your financial future. Once your account is open, you need to fund it. Link it to your regular bank account. Transfer some money over. You don't need a fortune to start. You can buy VOO with as little as the cost of a single share, which fluctuates but is typically a few $100s. Many brokerages now even allow you to buy fractional shares, meaning you can start with just $5, $10. The most important thing is not the amount you start with, but the act of starting itself. Make that first transfer today. Now for the exciting part, making your first purchase. Log into your new brokerage account. Open the trade or invest section. Type in the stock ticker, VOO. The system will show you the current price per share. Decide how much you want to invest. Enter the amount. Click buy. Congratulations. You are now a part owner of the 500 largest companies in America. You are officially an investor. Take a moment to appreciate this simple but profound step. The final and most crucial step is to put it on autopilot. The key to success is consistency. Automate it. Go to your brokerage settings and set up an automatic investment plan. Schedule automatic transfers every week or every month. Use those transfers to buy more VOO. This removes emotion and forgetfulness from the equation. The machine will invest for you in good times and in bad, steadily building your wealth while you live your life. This is the simple path, and it starts now.